Hi, good morning, everyone. Welcome. I think some of you have already joined us and you're early, guys. Thank you so much for being early. And let's get started right now, guys. Let's type a GM for good morning. If you can see and hear me loud and clear, this type of GM for good morning. Let me know who is joining us here today. Welcome to our One Good Trade live show that is happening right now. Good morning. I think we can see some of the chat messages, right? So there should be a chat message depending on whether you're on the computer or on the phone or at the bottom on your right side. So let's see who is here. Ji-Sing, good morning as well. Hi, Andy. Hi, Tricky, Damien, Steven. Hi, Mifi, Kun Sing. Hi, morning. Hi. Morning to all of you. Let's get started, guys. So today, I have a very special guest, right, who I will just introduce in a bit. But today, right, guys, it's slightly different, right? So, once every month, we try to do this session, which is what I call the One Good Trade live show. So if you have been following me for a while, well, every Friday, we have our Ask Me Any stock session, right? Whereby we cover like the Singapore stocks. Like this coming Friday, we'll be back to Singapore market. So we cover the stocks that you're asking about, right? So there's every Friday, Singapore, US alternate. But every once a month, I will invite a special guest, right? And that will be like Jamie from Macquarie that's coming later, whereby we talk about not you asking me all the stocks and I go through everything, right? That will be on Friday, right? But essentially, I'll share with you guys one stock, but not just share with you one stock, but more what to do with that stock and also how one can actually think about, potentially increasing your ROI or your returns, right? By using a very powerful product, right? Product type that, Jamie will share a little bit more as well, right? So very simple. That's what we're doing today. Today we'll be looking at this thing called the One Good Trade. What is the one good trade whereby we could see more upside, right? So good morning, Esther. Good morning, Ellen, Andy, Ice, David, Joanne. All right, thank you so much. How about to just like and share, guys? That would be really, really helpful. Hit the like and share button so you can reach out to more people, right? There's a heart shape button somewhere as well, right? Thank you so much. Jared here to support. Thank you so much for the support, Jared. All right, if you're looking at like the Singapore market, Singapore stocks, well, then thank you so much. You're in the right place, right? Good morning. Jamie, good morning as well. Okay, very good. Okay, so let's go ahead to get started right now. Maybe I can just go ahead to invite Jamie. Jamie, are you right over here? Jamie, welcome to this session right now. One Good Trade live show. Well, Jamie,
Hi,
you can share a little
everyone.
bit on yourself. Go ahead, Jamie.
Hi, everyone. Good morning. Good to see all of you. If you have been a follower of the show, you would know by now that every month we endeavor via Joey to really share that one good trade idea. There's so many ideas out there, but we really are trying to narrow it down to just one. So, very excited to hear what other good ideas Joey has for this month. And obviously, the ones who have dialed in the last session on the 2nd of July, you would know that Joey shared his one good trade idea being Mart.
Nice. Mart.
And further levels. At that point, Mart had already, been on a rally streak, right? It's been that way for 2 years now.
Yep.
And we were keen to hear Joey's view on whether he felt that it had more legs to run. And Joey's view was that, well, there was a key support of which if it doesn't break, then we were really looking forward to the support level, resistance levels or profit levels at 280 Hong Kong dollars, followed by 300. And obviously pleased to share that Joey is once again spot on his one good trade idea. And in this case, about a month and a week later, Mart did go to 280 on the 7th of August, and then even went further to 300 on the 20th of August. So I guess, Joey, I just want to throw this back to you. Congratulations on another,
Nice.
Nice trading idea, one good trade. Could you just share with us, for those who have missed out, what are the views you might have on Mart? And what was your thinking the whole time as it rallied? Do you get out at 280 or do you get out at 300?
Very good. I think, we could do that. We could just do a quick review of the previous stock that we covered, the Hong Kong stock Mart. All right, then after that, we go into the new stock for today. And today, there'll be one new Singapore stock that I'd like to share with you guys. Of course, Jamie will chime in later as well to share with you guys as to how you guys can potentially make a higher ROI with that stock as well. But yeah, I think it's fine. Let's go to look at Mart, right? That can do it. And let's see, maybe there could be even more upside from here, right? Let's see, there could be even more upside, right? Okay, so let's get started. So very simple, guys. I'll go ahead to talk about Mart in a bit. Let's pull out the chart and see how it looks like on my one good trend strategy or my 1GT Pro indicator that I have. If I know in a matter of seconds, you can just turn it on and see if there are any bullish or bearish signals. All right, so let's go to get started. So just a quick disclaimer, right? Well, today's session, right, is just for education purpose only. So please do your own due diligence, right? Not really to ask you to buy or sell anything, right? But to give you a bit of an idea based on the strategy, a proven strategy. Right, if you want to find out more, you probably can attend one of those free webinars that we have as well, right? I'll place the link in the chat in a bit. But let's take a look at Mart right now, right? Mart. So this is Mart, right? I would say, I mean, in the previous session in July, we kind of like talk about it, right? I would say one of the top performing stocks, all right, in the China's market, right? Look at this, right? And from here, September 2024, it was only about like $40 over. Look at it, $40 over. Now is what? 335 Hong Kong dollars. That's like 600 over percent, you know, 40 over Hong Kong dollars to 600 over, to 300 over 335 there. Look at these guys, 600%. So this is definitely one of the top performing stocks, I would say, in the Hong Kong market, right? I think those of you who are fans of Mart, right? Every time you see all the queues, I mean, my children, my daughter as well is a fan, right? I think the Doors, the Crybaby, Labubu, Dimu, or whatever balls, right? And now I think they're kind of like introducing these doors, right? It used to be on handbags, right, Jamie? But now I think they're like introducing, I read somewhere like they're kind of like introducing these much smaller mini doors on phones now, right? Can you imagine all the millions of phones, guys? Now I can tell you, everybody will have this thing hanging on their phone already. All right, so I think that kind of like is like a catalyst, all right? And well, let's take a look at Mart. So I think when we shared it previously, it was maybe somewhere over here. It was just like consolidating around that 240, 250 level. But you can see, guys, from 240, 250 now is really, well, in fact, went up even more already. Now it's like 337. This one was when I'm talking is 335. See, going up already, right? So it looks pretty bullish. But let's take a look at how it looks like right now, right? For my one good trend strategy. So very simple, right? I would say that 300 was actually a target that we had when we talk about it, right? So 300 was a psychological resistance level. Every time we neared it, you can see that we kind of like touch it and we came back down, right? We came back down. So we were trading below 300 psychological level for about 2 over months, right? Neared it, came down. You see, last week or so, we neared it and then came back down. But however, on the 20th of August, which is on last Wednesday, we finally went above that 300. Does it make sense about? All right, and that's a very bullish momentum because for the past 2 months, we have been going near it. Sellers came back and we pushed out. In fact, we got a couple of bearish candlestick coming out right over here, right? What we call a shooting star right over here. It just shows that sellers were out anything from 290, 280, 300. They came out and they pushed it down for 2 months. All right. But now finally the sellers like, I don't know, they gave way or something like, okay, please carry on, sorry, and please go up. And then we break the 300. So that could be I would say, a very positive momentum, right? If we were to stay above 300 right now, because 300 would now be what we call a new psychological support level. So this red line maybe turn to green color because now that resistance will be a support level. So my view is very simple. I think Jamie later will share a bit more on the warrants. I mean, based on what we have covered, it has gone up. Maybe it's gone up by how many percent? I think based on what we shared, it has gone up by about 33%, right? 33%. But that is just if you buy the stock itself. Does it make sense, right? If you buy the stock itself, like the normal stock, right? It will be a 33%. But what if you didn't do that, right? What if you actually use warrants? Right, to actually take a position in this stock? Would it be 33? More? 50? 60? Later Jamie will share with you guys a bit more, right? If you would have done that. And the main thing is that, what if you didn't buy previously, right? Could there be more upside right now? Well, very simple. Let me go to turn on what I call the one good trend pro indicator. So I have this indicator, right, based on my strategy, the one good trend strategy, which I've been using for more than a decade now, all right? And in this strategy, basically, we want to ride stocks that are, along with the trend. So if you're thinking about buying, then it must be what we call an uptrend, right? You want to buy strong stocks that are pushing higher, upside momentum is there, targets are being revised higher and higher. And not just the long-term trend is up, but the short-term trend is up as well, right? So you can see for pop Mart, right? The longer term trend has been up. Look at the red and blue line, right? This is what I call the 100 days moving average and the 200 days moving average. So both of these lines have been up since like, I mean, very long already, since like last year. So this one very easy to see. So long-term trend has been up. In the short term, well, it was actually quite boring for the past 2 months. If you look at the green line, right, it was up from January, February, March, right? And then from like June and July, right, the green 20 days moving average line started to go sideways, then sideways. Well, boring, right? But we were kind of like consolidating, gathering momentum, gathering the pace, all right? And what happened? Pump. We broke the 300 level, right? We broke the 300 level. And obviously, you guys can see that this green line from sideways for the past 2 months, right? Starting to point up. Not starting, in fact, already point up very loud. You can see that it's really point up right now. And we are seeing signs. So not just the longer term trend being up, that one is, I say, up since last year, right? But the short term trend that was like flat for the past 2 months, have finally woken up over the past 1-2 weeks. Does it make sense, Mark? All right. So that's why I think there could be more upside momentum. The long-term trend is up. The short-term trend is up. Now, let's go ahead to maybe turn on this indicator that I have to see if there are any bullish or maybe bearish signals coming out, right? If you see bearish, then you want to be careful, right? Maybe don't go and buy, but let's see, right? So one good trend pro in the middle of seconds. So today we're looking at Mart. Of course, later we'll share with you guys one Singapore stock you can put in your watch list. But essentially, right, for any asset classes, type in, right, whether it's Apple or DPS or Microsoft or anything, right? Type it in, get an opinion in seconds. Let's turn on this box, 1, 2, 3, pump. And let's take a look, right? Are there any bullish or bearish signals, right? So let's take a look at it right now. As you can see that, wow, we had a couple. So I think when we covered POP, I mentioned that we had a couple of like bullish signals. It was in April, right over here, January, even in like November last year, all the way up, all right? Long-term trend was up. We got a bullish signal. The short-term trend turned up all the way up, right? And it was a bit boring for the past 2 months, but you can see, guys, that we actually woke up, all right? We got a new 1 GT bullish signal right over here on the 6th of August, about 3 weeks back. 3 weeks back. In fact, before it broke the 300, right, we got this 1 GT bullish signal. We want to wait for a bit more confirmation whereby the short-term trend turn up. And there you go, right? So this 1 GT bullish signal seems to be in play right now. And if I could turn on another like trailing support level. So let me just show you guys this very powerful feature of my One Good Trend Pro indicator. Let's turn it on. And you can see, right? Once I turn it on, there'll be what we call a trailing support green line below the price. All right. Oh, I got another alert on one stock right over here. All right, let me just close it. So this trailing support kind of like followed Mart as it moved even higher, right? So as Mart moved higher from like about $160 in April, right? You can see the trailing support popped out and it was about 140. So this trailing support, well, it follows a stock as it moves up. But don't follow too closely. You follow, you give it the space, the allowance, the breathing space to move, right? So it goes up, it follows it. So you can see there's some space, right? There's space between the price and the trailing support. In fact, you see right over here, we near the trailing support and we push away from it, right? Over here as well, we near the trailing support and we push away. So we account for the space, we know the volatility, right? The natural, what we call pullback, that we account for that, right? So if you're above it, you're fine, no problem, right? So you can see this trailing support has been following Mart as it moved up from $40, 140, right? 140 follow up, flat, up, flat, up, flat, flat. So it's been flat because never moved, right? Never go up, so nothing to follow. So it was like flat. And then the past 1 week, right, start to follow again, follow, right? And now this trailing support is around that 280. Does it make sense, about like 280? So I think anything above 280 or, I mean, to give more space, 280 or maybe even above that 300 psychological support level, I think we still look pretty bullish, right? Whereby we got a few more confirmations pointing to more upside. All right, so this is like Mart, right? Trailing support has been following it since April from 140 all the way to 280. All right, and it's still ongoing. We have no bearish signal. What is a bearish signal? Well, a bearish signal will be something like this. Look at this, guys. Right? When you see a bearish signal, it doesn't mean it's going to crash. It just means there's some selling coming back. Maybe you take some profit, get out. You know what I mean? But like for example, for this bullish signal, right, that came out in April, right over here in April. Let's click on it and see. 105%, guys. 105% just from that bullish signal in April, all right? And if you see a bearish signal like this red signal coming out, then I mean, take some profit lah. 105%, you still want to be greedy, cannot be right. So take some profit, get up. But as you can see right now, guys, there's no bearish signal. I mean, I can't see it. I don't know if you guys can see it, but there isn't, right? So we still looks pretty good, all right? As long as, there's no bearish signal, we are above the trailing support, all the indicators are all pointing up, we can continue to ride it, right? 105% might seem a lot, but maybe next week become 120, 130, 150. I don't know, right? So I think this, guys, I mean, this could be one of the stock whereby you could put your watches as well, all right? And maybe right now, right, I'll pass on the mic to Jamie to share with you guys a little bit more on how one can actually, not just buy this stock up, right? But how one can actually take a position using what we call structured warrants. And of course, Jamie is the expert in it. Jamie's from Macquarie, all right? And he's the kind of like the market maker for all these warrants. So maybe, Jamie, I'll pass on the mic to you to share a little bit more on warrants. All yours, Jamie.
Thanks, Joey. Wow, I mean, no resistance inside, which is very interesting. So now the trailing support that you just talked about, 280 and 300 were pretty much the resistance that we talked about last month turned support, right? And I guess the question is really, two things. How did the warrant perform? Did it in fact, give you a higher return on investment? And then the second thing is now, with Mart above $300, and of course it's rallied 105% since April. Some people might just be a little bit scared to get in, but of course, again, Joey has said, but yet, the short-term trend looks good, no resistance inside. So if you're a bit scared, I think in this instance, to get in, and after all, getting in around 330 dollars, Hong Kong dollars, is not cheap. It's $60 over sing, right? So if you were a little bit, you are also optimistic on the stock, but maybe in terms of capital outlay, you don't have that much, or you're just a little bit scared because it's really rallied so much. One thing you can actually do is, in fact, use a warrant, right, for lower capital outlay, but also because warrants are really for short-term positioning only, not for you to buy and just ride the whole trend for over a year or for 6 months. So how do they perform? I guess we go back to what Joey covered last month, where he talked about, the upside of 280 and 300. Those of you who followed us, you would recall that I mentioned that the maximum holding period based on the 280 target price was in fact no more than 8 weeks. Okay. Sorry, no more than 4 weeks, in fact. So if we go back to the 2nd of July, this is my website. First of all, let me just quickly introduce it, warrants.com.sg. I promise you the best warrant website you can find in Singapore. And if you wanted to look at the historical performance of any warrant, we can go to Warrant Tools, a historical performance drop down. We go to Mart. And the warrant we covered the last time was this call warrant XY5W. Now, on the 2nd of July, where we add, the warrant was basically ended up closing at 5.1 cent on the bid. That's because Mart shares closed at $258.20. Now, how would it perform? Like I said, we needed to look at the exit target level of 280. The premise was that if it hit the target level of 280, then you will exit from the warrant because that's your profit taking level. But those of you, again, if you tune in or if you can look, if you are interested and you want to watch and catch up on the previous episode, what we said was based on the tools we use, the warrant selector tool and the exposure simulator tool, the maximum holding period for this was in fact only 4 weeks. And back then I said, look, if by the 4th week it isn't at 280 and that's your target level, you should just exit. Okay, and of course, if it was 280, you exit, right? Whichever happened earlier. But in the case of 7th of August, even though now you see the underlying ended at $278, during the day, in the morning, actually traded to about 280 before coming off. So that would have been your target exit level. However, what you'll notice is that on 7th of August, that is more than 4 weeks. That's 5 odd weeks from the 2nd of July. So what this meant was that the gearing of the warrant was not enough to offset the time decay, which is why the warrant is in fact down. In this case, you can see here based on the end day close, it's down close to 8%, even though the stock was up 8%. Now, ladies and gentlemen, this is why with warrants, you need to use a tool to really estimate your maximum holding period, because otherwise, if you're uncertain, and you're just holding and holding, what's going to happen is that even though the stock has gone up in your favor by about 8% in this case, the warrants in fact down. So that's really unfortunate. If you want to use the 280 price during the day where Mart traded to 280, the warrant was actually traded to about 5 cents. So it's only down one tick, but still nevertheless it's down even though the stock was up 8.6%. Right? So for those in this situation who held till here and said, often retail mentality, is this right? And I'm guilty of it as well. Like, my investment is down, right? In that case, what do? I try to hold. And since at 280, I still make a loss. For some people, the very disciplined ones, they will say, okay, I'm just going to cut out of it and wait for the next signal. Look at another stock. But in this case, if you were like me, you wanted to just hold and not admit defeat, then the other example we had in the last session where we said if you want to have a longer holding period, then you need to aspire for a 300 upside, right? $300 target upside. In which case, then I think you could have held it for at least 12 weeks. Now, in this case, Mart did go to $300, and that happened on 20th of August. In the morning at the open, it already was at 300. So that is a 22.4% upside from where we did the episode on 2nd of July. In this case, we pretty much hit close to where the maximum holding period is for this warrant. In this case, it didn't have so much gearing. It's supposed to have gone up about 4 times more. But in this case, it only went up by 31.4%. So still some gearing, still more than the stock, but not a lot more, right? That's because, the maximum holding period of this warrant based on the $300 target price was not very long as well. Just now I said 12 weeks, but I think it's really 10 weeks. So we're really at the maximum holding period. In this case, if you didn't cut your loss on the 7th of August and you decided to go for a $300 target upside instead, then you would have made more than the shares of about 31.4% and not a lot more than that. So I hope that with a review of such an example, the previous examples on the different episodes we've gone through so far always shows a much more magnified return via the warrant, right? But I think this is a good example of how you really need to adhere to the maximum holding period, which is what I talk about on every episode. Because in this case, I hope you have seen for yourself, even if your view was right, your warrant could be down. But in this case, if Joey always has a range of target prices, right? The more conservative and the more bullish upside. In this case, the more conservative target of 280 wouldn't have made you money via the warrant, but the more bullish target, a higher, 22% upside basically, generated returns of about 31.5%. So that's how my Mart call warrant did. Again, like Joey said, if it started his one good trend indicator will start showing a bearish signal, apart from just sitting there and watching it come down, one thing you can actually do is use a Mart put warrant. Why? Because put warrants allow you to profit when the stock pulls back. So just very quickly showing you that there is existence of this Mart put warrant. And if you wanted to quickly simulate and see how it will perform, you will then need to have a downside target. But of course, Joey is saying that his trend is now looking really good. But when it starts to show, the red signal of, you needing to get a bit more bearish, one thing you can do is consider this put warrant, but you also likewise need to have a target exit level. In this case, it could be, 300, or it could be 280. Again, the previous resistance turns support at this point, right? And how you can use this tool for this put is you enter the target exit level of 300, which is about 11% lower from here. And you simply need to increase the date. Okay, sorry, but this is showing
JB, would
0.
it be good? Would it be good if I kind of like try to project the next target price, and then from there maybe you could use the target price, and then we could like come project. Let's say one to get in like a position like in like current to that new target price. Would that help?
We can, but maybe whilst I'm on this, just very quickly I just want to show a quick example, right? In this
Sure.
case, if you felt that was going to pull back to 300 from current levels, which is an 11% drop, you can then consider using this put warrant, right? I'm afraid the tool is just a little bit wonky at the moment. Not great. So maybe Joey, I'll pass back to you to just do a demonstration of
Sure. No problem.
the chart analysis of Mart
No problem.
whilst I try to just quickly resolve this.
Got it. Okay, good. I think it's a very good one. Thank you so much, Jamie, for sharing a little bit on, on warrants as to why this is more like a kind of like a short-term kind of, instrument, or tool, right? It's not for you to just buy and just leave it there for like a few years. No, lah, right? It's more for you to ride, momentum kind of stocks, right? If it happens within a week, 2 weeks, the faster the better, all right? And that's where you could increase your ROI. By trading warrants. But Jamie mentioned a little bit on the target price. So of course we have breached our target at 280 and even at $300. Now it's 337, right? So really go above 300 lah. So we so some people might be asking, hey Joey, then what's the next target, right? So what happens is that when we look at the target, we're going to see where are levels whereby we may see some selling coming back again. Where are the resistance level, right? Whereby potentially we might see some profit taking coming back. So if you look at Mart, right, what happens is that when you look at the left side, and then you see, are there any previous highs that can give us an idea of the, some selling pressure coming back? And if you look at the high, you're nothing there, right? Why? Because you are already at the high lah, right? You're at the all-time high. So you look at the left, there's nothing. You're at the high already, right? You're like at Mount Everest already. You look down at Bukit Timah Hill, then it's like, of course, you're higher lah, right? So nothing to look down, right? So then the question is, then how would the next target be? How would the next resistance be like? Well, we can do a bit of a projection in that sense. So how do we do it? Very simple. Let me just teach you a little bit of the strategy part, right? So what we could do is very simple. We could do a projection in terms of the current consolidation phase. So for example, for Mart, right, we have been consolidating, I would say, from like 230 to about 300, like I say, quite boring, right? It was like moving sideways for 2-3 months, right? So about 230 to about 300, up, down, right? 230 to 300. So what you could do is to, if we project it after breaking that 300, right, which we did, we could project it from here and we kind of like shift it all the way back up. Something like this, right? So just give us a bit of a guidance, right? So I would say that the next target could potentially be anywhere from 370, 380. I mean, if you want to put like 400 as well, I think that would be fine. Does it make sense? Well, actually, that's how you can do a little bit of a projection just based on the current consolidation phase, right? So if one were to take a position maybe near 320 or 330, you write it all the way to 380, or let's just assume like from here over the past few days, if you have got in, it breaks the 300, you got in and you write all the way up to the next target, that would be easily, just on the stock alone, the underlying stock, that would be a 23% kind of like upside. All right, of course, if you use warrants, I'll leave that to Jamie again. It would not be 23%, all right? That would be, your gains would be more, would be magnified. All right, so that'll be a target, maybe about, let's say 380 lah. 380 would potentially be the next target, just based on the current consolidation that we have projected upwards. All right, so Jamie, let me pass on the mic back to you. Oh, you need more time, Jamie?
Okay, so back to this. I figured out why. No, my website is not wonky. It's my bad. This warrant and WW would actually list its upcoming listing, so it will list tomorrow, which is why it's showing 0. So that's a put warrant you can consider. But if we wanted to just simulate using the existing warrant, which is very cheap because obviously Mart has rallied so much, and so the delta or the sensitivity of this has really dropped. But the gearing has also gone up by quite a bit. And I wanted to quickly simulate how it will perform. So as Joey said, let's say if it went to around 380, and that's where you really want to get in on a short. Now, we don't know when this will happen, so we are just simulating in this case. Maybe it happens, I don't know, maybe on Friday. But whenever it happens, you can obviously then just type in, the 380 exit. Short level, right, where you want to enter via put. And then maybe your target is around 300, right? You can just enter it here. Now, this translates to about a 21% drop. Maybe some of you are thinking, 21% drop is a lot. But bearing in mind, Mart is where it is because, most recently this month after the results it published, and where it showed that Labubu, those have just really been on a large, it's been a large contributor to top to PopMart's revenues and its popularity continues to surge. There's no backing down. I mean, it went up, I think, more than what 15% in a day, maybe even 20%, right, Joey? There was a 1 day gain, and so this can easily happen in a day. This could happen in a few days, right? In less than a week. This kind of moves in PopMart. So in this case, just very quickly, let's say if it took 5 days to happen, this drop, then this put warrant would actually grow by more than 10 times, right? It will surge 233%, right? This is the power of gearing, the power of magnification, especially when your view is right, then it's great, in the green for about 233%, you can get out already. But again, with warrants, like I said, we should never be holding on to this for a long time. So we're really wanting to say, okay, with PopMart warrants, how long can I hold on to it for? So you simply only need to increase the number of days. And you can see that as you increase, the percentage gains on the warrant is dropping, right? That's because the holding cost known as time decay is setting in. Okay, so you just need to keep increasing it to the point where you don't have much gearing. You see 29 days from when you enter, the warrant actually doesn't make any gains at all. So this is what you don't want, right? So the maximum holding period is really around, I would say, there you go, around 25th of September, 27 days. So if your view was that PopMart shares are worth a short at 380 and you want to get out and cover that short position via this put warrant at 300, which is a 21% drop, then your maximum holding period is 27 days. And you really must try to adhere to it because, like I showed you via the call example, even if Joey's target exit levels get realized, if you don't adhere to the holding period, or if the stock doesn't move in a greater percentage in your favor. So for example, this is 300. That's the lowest we think it could go. Then the maximum holding period is 27 days. Unless you think it could go a bit lower, back to 280, which was the previous support level, then you can hold on to it for longer, because even at 27 days, it's making 100% return. You can hold on to it for maybe around, there you go, about 30, 35 days. Right, so you can hold on to it for just a bit longer, another week longer. But this is something you really need to bear in mind: the maximum holding period of warrants. So this is a very quick and simple example using what we call the warrant calculator tool that we have available to calculate and estimate the maximum holding period for each warrant that you're interested in, as well as the simulated gains based on your target exit levels. So by now, I hope you already know. I already saw one question on whether warrants are like options, because it sounds a lot like it. And the answer is yes, warrants are a form of option. And you, like with options, similar, you can't be holding on to them forever. They provide leverage. They're very cheap. They require very low capital. But the difference really is, warrants are not a margin product, unlike options, right? Which, as a result of it being a margin product, the loss can be unlimited. Also, because options, you get to short it. With warrants, you can only buy. Either you buy a call or you buy a put. Because securities on SGX are not permitted to be shorted. So what this means is that you can only go long, right? And if you shorted the instrument, you'd be subject to the buy-in market. So as a result, you can't use option trading strategies which involve shorting the option, right? And so with warrants, you can only go long. But the good news is that means that your losses are not unlimited, because whenever you short any instrument, your losses can be unlimited, right? So I guess that is just very quickly, to me, the big difference between the option and warrants. Of course, there are more details in terms of the differences between warrants and options. For example, with warrants, we have a designated market maker known as Macquarie to provide the bid and offer prices. So those prices that you see here, the live matrix tool that shows you the live prices between the warrant bid and the warrant offer price, alongside the stock bid and the stock offer price. Now, these prices on the bid and offer are maintained by a market maker, in this case Macquarie, to provide the ease of entering and exiting from a warrant. Okay, so those interested to short PopMart via warrant, I suggest that you wait for tomorrow's new listing of the put warrant, because this warrant here if you can see on the live matrix, it's actually on a wide spread already, right? It's between, the spread is 0.007 on the bid and then 0.01 on the offer. So it's about 3 ticks and more, which is something we do not encourage investors to get into because they are just not cost economical for you, right? When any instrument is trading on a wide spread. So I would suggest you wait for the new listing and you can go through the same exercise of using the warrant calculator. And with that, I'll just quickly pass back to Joey. Now that we have done with, analyzing Mart, I think we really want to go back to today's main topic of interest, Joey, which is what is that one Singapore share that, has already rebounded, and you think that, and I guess the rest of us are wondering what you think of it and whether it can extend its rally, what are the key levels we should look at, what are the cut loss levels, if we're already long it, and basically enter, exit, and the cut loss levels, because from there, we can then use an instrument like a warrant to also decide on where our entry, exit, and cut loss levels are. So Joey, back to you.
Thank you so much, Jamie. Well said, right? Well said. So, guys, I hope that you have a better understanding of warrants, right? It's not just about a call warrant. I think Jamie also shared a little bit on put warrant, all right? So, I've covered Mart, so I hope you guys have a better idea. I'm a little more bullish on it, so for me, it would be more on a call warrant. But the point is that if you want to kind of like take a downside kind of like move, right? In terms of you think that it will go down, well, you can also do what we call a put warrant. But for me, I'm more bullish. So for me, definitely more a call than a put warrant. So I just want to share with you guys, okay? So let's go on right now. How many of you want me to share with you guys one of the top Singapore stock that is in my watch list for a while? I think there could still potentially be more upside, especially if we spot certain things that I will share later as well. This type of T, guys, type of T for top. If you want to know what is this one top Singapore stock that you can put in your watch list for potentially more upside, let me know. Just type T in the chat. Let's see. I think a lot more of you have joined us today. We have more than 150 of you. So I think I just want to clarify, right? Today, guys, I think some of you are asking about the stocks, right? For a quick opinion, right? So today is slightly different. Today is like on Tuesday, it's not Friday, all right? So every Friday, we actually do our Ask Me Any Stock sessions, right? Whereby we go through the Singapore stocks or the US stock that you guys asked about. But today is different, right? I don't have Bervin and Z with me, my team, but today I have a very special guest, Jamie from Macquarie, who will come and add in a little bit on how one can trade on warrants. And not just that, before that, I actually will share about a stock, right? So those of you who are asking about your stock, maybe not today, maybe on Friday, joins on Friday. That's where we'll cover Wilmar, somebody asking about another stock like this, like Karen asking about, let's see, I think we have another stock like this, Thai Beverage or Singpost. Well, we'll probably cover it on Friday, join us on Friday, and then we'll go ahead to do our best to cover, right? So let's see, right? Top, Andy, T, Sadie as well, Michael, Ian, David, all right? Welcome, right? Mao as well. Let's go ahead let me share with you guys one of the top Singapore stock whereby I think looks pretty good. We have got a couple of bullish signals coming out on my 1GT Pro indicator, all right? And that would be this company called YZJ Shipbuilding SGD. The code is BS6. Let's take a look at it right now.
Joey, I just want to quickly interrupt. I had a colleague who asked me, how come we like to mention YZJ SGD? Why do we mention the SGD? But that's also because there is a CNY version, right? The renminbi version. So
exactly.
Yeah, so just be careful. This is YZJ Sing dollar.
All right. So there's two type of, dual currency. So you can see YZJ SHIP Shipbuilding SGD. So let me just show you. Okay, let me just show you, right? So you can see right over here. There is the CNY, Chinese yuan, and there's the SGD, Singapore dollars. So I think the more popular one with the Singapore dollars, it's listed on the SGX. So we're talking at the one that is the code BS6, all right? And guys, I think it is like starting to move right now. In fact, just now when I was looking at it, it was like below that 295, but now it's 298 already, okay? But anyway, let's go ahead to analyze this stock right now. So you can see, guys, very quickly, this is YZJ Shipbuilding, right? I already turned on my One Good Trend Pro indicator, right? So you can see I can turn it off. And pretty much this is what we're looking at, just very basic charts, right? But sometimes I'm very lazy, as I say, in the matter of seconds for any stocks, any asset classes. We talk about Mart, now it's YZJ, it could be DBS, it could be Apple, doesn't matter, right? But let's turn it on and right now and see what happens, right? pump. There we go, right? So YZJ has been on my watch list, I would say, since last year. We had a couple of not just bullish, but you can see when we have bearish signals coming out, like Mart, right? When I mentioned that if you see a bearish signal, a red color one coming out, right? Then be careful lah. I mean, like more than 100%, you get out, take some profit, right? Same thing, right? Why? Because when we get bearish signal, you can see it starts going all the way down. Of course, we get other confirmation as well, saying that it's heading down. So get out, take some profit, and maybe get back in again, right? When the time comes. So did the time come previously? Yeah, it come, right? Pump, right? A few more bullish signal, and there we go, all the way, all right? So let's just fast forward. And you can see that in February, we got not one, but we got two. One GT bearish signal, not one and two left, all right? And you still have to buy, all right? Probably get out, right? Get out. And you can see that we started to sell down from like 310, 320, all the way down until 180. Imagine if you hold all the way down. Does it make sense? Right? So you don't want to hold all the way down. You want to get out, let it stabilize, see some signs of the trend reversing back up. Then you think about getting in again. So yeah, all right. We have been watching this stock since, I would say, May, June. Why? Because we got a 1 GT bullish signal. We got alerted to it. In fact, somewhere in July, this last month, we got another 1 GT bullish signal coming out, and it started to move even faster. Does it make sense? All right, and there we go, all the way up, right? And looking at the trend right now, I would say that the short-term trend is up. It has been up since like last month already, right? It was like flat and up a bit, flat and up a bit. This green line, you can see, obviously this green line is pointing up. Does it make sense? All right, so as long as the green line is pointing up, I would say that the short-term trend is up. The longer-term trend, well, it was up very strongly, I would say, in 2024, right? Look at the red and the blue line, very strong longer-term uptrend. No problem, right? Of course, then in February, as I say, we got two bearish signal, right? So the longer term trend started to go a bit sideways, maybe a bit down. Look at this, right? Down to sideways. But look at this right now. You can see that the red line and the blue line, we are both starting to point up. I mean, look at this right now, right? Both starting to point up. If the red line were to go back above the blue line, that would be another confirmation whereby we can potentially start to see the longer term trend firm up as well, right? And I think that will happen, right? If we go above that resistance, we break it. Later, I'll talk about it, right? That is where I think potentially we can see more upside in terms of the longer term trend. So what when we see something like this, let me just try to extrapolate. For example, this red line, right, starts to maybe point up like that a bit more. Let's put red color, all right? And maybe the blue line, 200 days moving average, all right? Maybe just very gentle like that, something like that, right? Let's put blue color. When this happens, I'm not too sure when, this is what I'm drawing, right? But let's say this happens next month or next week and something, right? That would be another confirmation that the longer term trend has officially turned back up, right? And if we get more confirmation, we could see even more upside. So this stock has been on my watch list a couple of months back. There could still be more legs to not just the reversal, but even a rally to even higher highs, right? So now let's take a look at what is happening over the past 1 to 2 weeks. So before today's session, in fact, it was just now, it was only about 290, right? And for the past 2 weeks, actually, we were trading from 280. I mean, let's look at this right up here. 280 is what we call a horizontal support level. So 280 was where we neared it, and then we rebound. You can see a couple of bullish reversal candles right over here, right? Rebound, right? 280 all the way to where? All the way to $2.95 right over here, right? 295. Okay, so actually just now in the morning, before when Jamie was talking, it was actually about 292, 293. We're still below the 295 but seems like right now, I don't know why it's happening right now, but basically, all right, you can see right now, what's the price? 297, which is above 295 correct? Doesn't make sense, all right? So I don't know, right? But it seems like we are attempting to break the now become 298 already, right? So it seems like we're attempting to break the 295 resistance level, all right? And of course, $3 will be what we call a psychological resistance level. If we go to above $3 as well, I think that would be even more confirmation, right? We go to 301, 302, 303. I think that would be where we can potentially see more upside, all right? And what would be the target? Well, let me just go to draw this target right over here. I would say that we may potentially retest the previous high that we have seen, right, just before the sell down in February, right? So, in February, there were some signs of, tariffs being announced. I think some of the Chinese There was some port fees that was being announced by Trump and all that, right? So that kind of like hit a Chinese shipbuilder quite heavily, especially they're going to the US, right? And we got two bearish signals. So that would be the 320 resistance level right over here. So I think upside targets could be all the way to near 320 first, right? But of course, if we break 320, targets could then be revised even higher to what? I don't know, right? Maybe to 350. That could be the next upside target. So not too bad, right? I think we were consolidating from 280 to 295, but seems like we are starting to attempt to push even higher. All right, these bullish signals are still in play. Obviously, there's no bearish signal right now. I mean, if you see these two bearish signal coming out like over here and here, then maybe you want to get out. But I mean, as I say right now, there isn't a bearish signal. It still looks good. We can potentially still continue to ride this stock, right? All the way to the first near-term target, about 320, then maybe to $3.50. So this would be what we call the Singapore stock, right? The Singapore stock that I want to share with you guys has been on my watch list for a while. We have shared it with our clients in Phillip Securities as well. So I'm not too sure how many of you are clients of mine in Phillip Securities, whereby you're getting, I mean, you have a trading account under me in Phillip Securities, and then you are getting our daily ideas by WhatsApp. This type of C, guys, type of C for client. If you're a client of mine, I just want to acknowledge all of you as well. If you're a client of mine in Phillip Securities already for, you have a trading account under me, let me know. Let's see, we have, I think some of you might be clients of mine, right? Maybe some of you are just scrolling through YouTube and Facebook. You have no idea why you're here as well, all right? But I think we do have quite a bit of clients over here. Thank you so much for the support, Ice. All right, Ji Sing as well, definitely. Ice, John, Cynthia. So quite a bit of clients are joining us every Friday as well. And on this session, Andy, thanks so much, Michael, as well for support. Ivan, all right, First Last, Jared as well. Stephen, client. So very good. So basically, those of you who type C and you're a client of mine in Phillip Securities, you probably receive a few notes about YZJ since a few months back. You can check your WhatsApp, okay, Sen? So these are some of the ideas that we share out to our clients in Phillip Securities, right? So those of you who are client already, good, no problem, right? You're good to go. But just want to share, like, in case you are not yet a client of mine in Phillip Securities, you are trading, you need a trading account, right? But you don't get any ideas or videos or WhatsApp or training. Nobody send you anything. Your own broker never do anything. Then you might want to become a client of mine in Phillip Securities and get ideas like this a bit faster lah. So like Rebecca and everything, right? So maybe what you could do is to check it out. I'll just place the link in chat in case I forget it, right? So check out how you can become a client of mine in Phillip Securities for free. You do not pay anything more, right? So that's the link in the chat. Find out as to how you can become a client of mine in Phillip Securities for free to get ideas like this much faster. All right, so this is YZJ, YZJ Shipbuilding, Singapore dollars, one of the Singapore stocks in our watch list. There could potentially be more upside. So I believe that now I want to pass on the mic to Jamie right now to share how one actually use warrants right now, right, to potentially make a higher ROI. So for example, like right now, from let's say you maybe right, let's say you have got in earlier, right, let's say about 283 or all the way to like the 320 target, you'll be at 12% if you get in on the underlying, right? But what if you use warrants? Would it be more? That's where I will leave Jamie to share a bit more on how one can trade structured warrants, right, on YZJ. Jamie, all yours.
Thanks, Joey. Now, I just wanted to add that you could be a client of Joey. You received this trade idea maybe a bit earlier, but the good news of dialing into this One Good Trade show anyway is that you get to see his live analysis and you get to ask more questions about, not just Joey's views on YZJ, right? If you already went in, a live update of his views, but also you get to find out about how an instrument such as warrants can further leverage your view. So of course,
Definitely.
if Joey was right and the market went up, 12% from here, then that's great. But how can you get even more bang for buck? How can you get even more returns out of this view? Well, one of those ways is via our warrant, which you can find out from warrants.com.sg on how it performed. Just checking, are you guys seeing my screen?
Yep, all good, Jamie. Go ahead.
Yeah. So again, back to warrants.com.sg. This is the website you need to know. Okay. And why? Because it will provide you all the tools in order for you to simulate your return on any warrants that you are wanting to look at or based on the view you have. Now we are talking about YZJ now, and just now I've showed you the calculator on the projection of Mart, warrants. But the other tool that's pretty good and very fast and easy to use is the warrant selector tool. So just want to give you different tools, but ultimately with the same concept, which is where's your entry level, where's your exit level, where's your cut loss level, and of course what the warrants will do, and the maximum holding period if you wanted to leverage your return. So we're talking about YZJ, which is up 2.4% today already, and we're bullish on it. So we'll click a call here. Of course, there isn't a put warrant over YZJ anyway, so there's only a call to click on. Well, there are 3 YZJ warrants available, and what this warrant selector will do is to show you the different kind of simulated returns that you can achieve based on your target exit view, and let you then make your decision on which to trade. At the same time, we've got this little fire logo here that, is next to one warrant. And the reason for that is because we know Singaporeans, want to know the quickest way to select a warrant. So we actually have a fire logo next to the warrant with the tightest spread and highest liquidity, on both bid and offer, so that people can quickly, choose it, if they wanted to, and single this out as a warrant to look out for and place on their watch list. Now, to get into warrants, you have to know not just where your entry level is. In this case, if let's say you wanted to get in at 298, which is now, because, as Joey said, it has been trending up and it looks like it could continue to be very strong. And we will put in the first target level of 320, which is his target exit level of 7.4% from here. And then how will that work out when you look at either of these 3 warrants? Now, to know that, you need to increase the number of weeks here to the minimum of 2 weeks, so that it will display the returns if YZJ shares were to go up 7%. Of course, that's the best because you get the maximum returns out of warrants, right? There is no time decay that happened today. But realistically, let's say if it happened over a week instead, or over 2 weeks, how will the warrants perform? Now, it's all in this table. In this case, the current price of each of these warrants is stated here, and their projected prices are stated here based on the number of weeks you intend to hold on to it for. So the shorter the time, the stronger the trend, I would say. The stronger the trend, the shorter, that means the shorter holding period you can have in order for your target exit view to be realized, the better, because the more returns you get. So what we're really wanting to also see, apart from the maximum return, amongst the warrants we can have, is obviously the maximum holding period. So to find out what the maximum holding period is by weeks, you just need to increase this. Can you see that straight away? The third warrant, which has looked the best so far, up to the 2-week period, where it's generated the highest returns, of about 69% if YZJ were to go up by 7% today, or even in a week's time, it will go up by about 7 times more than YZJ shares, right? It's got the best returns, but the holding period is the shortest, because by the 3rd week, it already would give you no return because of time decay, because of the holding cost eating up the gear returns. So if your view was that YZJ shares have been showing a very strong trend, and you think that, because there could be, event specific, if news came out or whatever, then you want to get in and give yourself a very short time frame of 2 weeks, then yes, I think this 3rd warrant is good. But otherwise, you probably want to look at these 2 warrants instead, and you need only to just keep increasing this, and you will see that basically by about the 6th week, this second warrant here will only generate a 10% return, whereas the first warrant with a fire logo will generate a return less than the share. So what this means is that this first warrant here, which only costs 2 cents, so requires a very low capital outlay compared to a $3.20 entry level in the stock. The maximum holding period for this is about 5 weeks. And then for this second one, you can hold on to it for about 6 weeks maximum holding period. In this case, it's only up about 10%, still more than the shares, but at the same time, just know that you can't hold it beyond 6 weeks, right? The current price of the warrant is more. It's more than this YZJ warrant here with the fire logo. So it's about, almost 3.5 times more. Sorry, 3 times more. So it will require a higher capital outlay. So, I mean, regardless of which warrant you want to choose, whether it's KLG or GFG, just note that the holding period differs by about a week. If you wanted to hold for longer, what has to happen then is that the shares got to move more in your favor. Now, the other upside that Joey talked about, in this case, if the trend was to prove to be very, very strong, then the other upside he was talking about is about 350, which is about 17.5% higher from where the current entry level of 298 is. Now, in this case, even by the 6 week, you realize the warrants are still throwing in geared returns of about 3 times more geared returns, so you can actually hold on to it for longer. So the more the stock moves in your favor in a greater magnitude, the longer you can hold. How much longer? We just keep increasing, same exercise. Hopefully by now you know the drill. You increase it to about 12 weeks from now. 11 weeks from now, you see this warrant is only generating about 20%. So just a bit more than Yang Zijiang shares. So you can't hold it beyond 11 weeks if your target exit was 350. But if you want to hold for just a bit longer, then this second warrant here, by the 16 week is still generating about 27% return. So you can hold on to it for longer. Now with this, you can probably either still go for this this cheaper warrant with a higher gearing, but which you can't have, such a long holding period. Or you can go for this warrant, which is a bit more conservative, which allows you to hold for longer than 16 weeks actually. Now, if you wanted to kind of work out kind of the approximate date rather than weeks, you can. So 16 weeks is around how many months? About 4 months, right? In that case, you have the other tool, which is known as a calculator tool, which was the first tool I used by demonstrating how the pop mark warrants will move, right? In that case, if you wanted to go to that tool, you can click into this warrant here, GFGW. By the way, this warrant code is the code you enter into your brokerage trading platform in order to trade the warrant. If you click into the code, it will always take you into the live matrix page, which shows you where the live prices of the warrant is. Okay, it will show you that this is the warrant at this point where the stock is at 2.97 is at 6.6 cents. If the stock was at 2.98 on the offer is at 6.8 cents. Now, if you wanted to work out the approximate date which you can hold on to warrant based on that view, apart from the selector, like I said, you can use this tool to work out rather than in terms of weeks, but the date, right? So in this case, we said about 4 months. 4 months from now is actually around, wow, pretty close to Christmas. So the last trading day of this warrant is actually 19th of December, which is why the maximum here, as you can see, is this 115 days, right? This is the maximum that you can hold on to, because after this, the warrant stops trading. Okay. And in that case, on the 19th of December, if you hold it until the last trading day, then your last chance to get out really is on this date, right? The warrant will go up by about 27% if Yang Zijiang shares went up by 17%. Okay, so this is something for those who are interested in this warrant to note. In this case, this is GFGW. The maximum you can hold on to this is 115 days from now, because beyond 19th of December, the warrant will stop trading. And you shouldn't hold it to expiry, because at expiry, what happens is that the warrant value would potentially be even lower if Yang Zijiang shares, settle at $3.50, right? It will still come in at the lower price, because the time value component in the warrant is going to go to zero, right? Right now, it's got time value because there is time to expiry. But at expiry, all time value warrants go to zero. So you are always better off getting out of a warrant before the expiry date. In fact, you should never hold it to the expiry date. Okay, this is something we always hope that investors will take away. Who tends to hold it to expiry? Basically, those who have lost money and refuse to cut their losses. Actually, those are most of the examples as to why people hold it to expiry. You really should be getting out earlier. Well, hopefully Yang Zijiang doesn't take 4 months to go up by 17%. Especially if it's on this big streak, it's very strong rally. And of course, if it only takes, say, about 2 months from now, then you'll find that this warrant will go up by 40%, which is about close to 3 times more of Yang Zijiang's 17%.
Wow.
You can actually use this to magnify, but not by a lot. case, it's only about 3 times. Why is this less than, the Mart example where we saw earlier, where it magnified by more than, 10 times? That's because every warrant has got a different effective gearing level. Under the warrant terms tab for this warrant, you can see the effective gearing of this warrant is only 3 times. What does effective gearing mean? It means the approximate number of times the warrant moves more than the shares. So 3 times means if Yang Zhejiang shares were to go up by 1%, this warrant should move up around 3%. Well, we've got warrants, of different kinds of gearing. If you wanted to see the different kind of gearing, there is this warrant search tool. You see immediately with anything that has a gearing of about up to 30 times, and we've got something that like Yang Zhejiang, more conservative, about 3 times. So there is something for everyone, depending on the kind of risk you want to take, right? So in this case, with that, back to the Yang Zhejiang warrant, let me go back to it. Back to the Yang Zhejiang warrant, it's around 3 times gearing, so it will magnify by 3 times more, provided you stick to the maximum holding period as well, okay? And be aware that, the maximum that you can still make gains in this is basically via this warrant until the last trading day on 19th of December. Okay, but of course, if your share price target was a bit more conservative, instead of 350, it was 320, then you'll find that if you held it to the last trading day, you actually make a loss. So the holding period needs to be shorter. And again, something we talked about via the selected tool in weeks. So now we want to work out the days. I think it was around 10 weeks. So that would be, let's see. Yeah, there you go. It's about 45 days. Okay, it's about 45 days from today, around 10th of October, second week. You really should be getting out of this Yang Zhejiang warrant already. Even if Yang Zhejiang doesn't go to 320, you should get out, because it's very simple, right? If the shares already go to exit level of 320, and even then it's only making a 10% return. What more, if you would hold on to it for longer, and even if it gets there, you see that so say, for example, you want to hold onto it for longer, right? You want to hold onto it for 60 days from today. Then you actually make less from the warrant, even if Yang Zhejiang shares went to your target exit level, which is why the maximum holding period is very important, okay? So you can use this tool. It's all free of charge, warrants.com.sg. Have a play around.
The link is in the chat, guys. I've placed the link in the chat.
So that you can also estimate the simulated returns. I guess at this point, we should always ask what a savvy investor should ask, which is, Joey, what is the cut loss level? Because now we've done the simulation for, upside targets and all that. And your one good trade obviously has been a one good trade. But what if this turns out to be a one not so good trade? Where is the cut loss level we should be adhering to?
All right, very good. Thanks, Jamie, for sharing on warrants. I think you guys are a little bit more clearer on warrants, right? Regarding what Jamie have shared on, the holding period. It's not meant for you to just hold all the way, right? Because the more you hold, as time value is decaying, all right? So, if it's
Joey,
a target,
we can't hear you.
Can you guys hear me? Let's see. Okay, let me just see. All right.
There you go.
Okay, there we go. All right. So yes, right. So what happens is that we want to make sure that, for warrants, right, we don't just hold blindly. All right, we don't hold blindly. We want to make sure that we know our maximum holding period. Time to get out, you get out. Okay. Now let's go to talk about this thing called the kind of like if it falls below a certain level, you want to get out. You want to stop loss, and what would be the stop loss level be for Yang Zhejiang Shipbuilding? So what we could do is this, right? I would say that we can turn on the trailing support level. Look at this right over here. So I've turned on the trailing support. You can see that when we had the first 1 GT bullish signal popping out in May, right? In May, we got a trailing support that followed. Same thing like Mart, right? It followed. You follow a stock, you follow the market as it moves up, you give it the space to breathe, right? If you're above it, you're fine. But if you go below it, all right, then not so good. Why? Because we give you the space to be above, right? You should be above if you're good, but you use up all the space and you go below that trailing support level that accounts for the volatility, then maybe a bit more bearish. What we could do is to put a stop loss based on this strategy, based on my one good trend strategy. We could put a stop loss below what we call the trailing support level, there's a bit more allowance leeway given, all right, leeway given. And I would say maybe what you could do is just put it below, if you want very tight, or you could put it below 280, right, 278, 277, but even give it the space, right? We can put it below the trailing support, and that's what we advise as well. So perhaps one could put maybe the trailing support maybe about 270. I think 270 would be where we give it a bit of space. You don't want to get overly too worried if we are above this level, right? So Jimmy, that would be maybe somewhere around that 270 would be the kind of like the stop loss level if prices were to dip to that level.
Okay, so again, we asked that because we want to know what kind of losses we could potentially run into, right? And this case, again, the same tool, the calculator, you get in today, and say, basically 2 months from now, it goes to 270, which is below the trailing support. Then what kind of losses could we potentially see in the warrant? Now, then you'll see that, again, geared returns works both ways. It's going to magnify your returns on the upside, but it also magnifies your losses on the downside. So if YZJ shares were to come down 9% from the current entry level, and where you want to say, okay, I'm out because the trend has changed and it's no longer going up, then just note, then in this case, it will go down, right? Your losses will be about 4 times more. So it's going to be down 45%, okay? So that is if you held it, 60 days from today. The losses will obviously be less if, again, the shorter the holding period, the bigger your gains, but the smaller your losses as well, right? So hopefully it doesn't go there, and hopefully this trend stays. And so now via these tools, via warrants.com.sg and this demonstration, how the warrants will perform based on your view, and how you can use it, to gear up your returns, hopefully. But just note that, obviously you see with warrants, there is time decay, but actually the holding cost, which erodes into your investment returns, happens for actually most instruments, or I would say all instruments that provide gearing, that provide leverage, that enables you to magnify returns potentially. And so this is something you just need to pay attention to. In the case of warrants, we equip you with understanding of both returns and risk, but more importantly, how you can maximize your returns, which is why I partner with Joey. Apart from showing his view, use this platform as an opportunity to tell you how it will, what are the pitfalls, right? So with warrants, you just need to know the maximum holding period is, based on these tools, the number of weeks or the approximate date, and really adhere to it. Because, again, if you think, warrants are too troublesome because you have got to adhere to these things, and you think with other leverage instruments you can just buy and hold, I think pretty much it's really just the security itself that can allow you to buy and hold. But even then, if it's a foreign stock, there's actually custodian fees as well, right? So there's always fees involved with holding, okay? And the longer you hold, the more you pay. So just be wary of that. But hopefully, even with the holding period, because the stock moves in your favor in the short term because of strong trends, which is why we really want to really talk about that one good trade that is showing, an exceptional trend. Hopefully you get out of it, rather quickly. And, since we have done this one good trade, I would say, one good trade show, most of the trades have actually made very big moves within, the kind of time frame, the maximum time frame we've been talking about, right, Joey? So hopefully this will not be an exception, okay? So, I've come to the end of my presentation. Of course, if you want to know more about warrants, I see some comments about, does the music lover is asking, does the warrant trading period follow USA or SGX stock market timing? Well, all our warrants follow the SGX stock timing, and we actually include that under the live matrix, what the market making hours are. So YZJ being a Sing stock is just going to follow the Singapore trading hours. It breaks at lunch at 12, and then we close at 5, right? If it's a Hong Kong stock like Mart, then it's a bit different. Why? Because Hong Kong market only opens at 9:30. It also breaks at 12, but it shuts at 4 o'clock. So just pay attention to that. It doesn't shut at 5. So if you want to get out during the day, you have to get out before 4. In fact, we say here 3:58. Why? 2 minutes before. Why, 4:58 is not for auspicious reasons. It's because we need to hedge the positions, right? Whenever you buy and sell a warrant, we actually need to hedge. So if you came in and submitted your order at 5 p.m. sharp, we wouldn't be able to hedge it in time. So we give ourselves, a grace period of about 2 minutes to hedge. Okay, so I hope that answers your question, music lover. Those who want very specific answers to questions like, hey, how come certain warrants on wide spreads, like how come that Mart put warrant just now that you mentioned is on such wide spreads? What is the reason behind that? In that case, you can sign up for our upcoming seminar, which talks solely and exclusively about warrants in an advanced in an advanced manner, and that's happening next week, 3rd of September. Okay, 3rd of September, you can come down at 6:30 to the Macquarie office. We serve dinner whilst talking about warrants in greater detail, and hopefully, you're equipped with that knowledge on warrants so that you can use it to meet this very strong market, but one that also presents very violent moves in the short term, and you can know how to maximize your returns using an instrument, and of course the pitfalls and why warrants move a certain way, why certain warrants are on certain, why are some warrants are wide spreads, why are some warrants are tight spreads. But of course, any other questions that we can take, we're already 11:10. We don't have much time, but any warrant questions we can take, I'll be happy to take them if we've got some time. So maybe shoot through those questions very quickly. But if there are certain concepts you want to know in a deeper understanding, you can come and sign up for this seminar at warrants.com.sg. I'll put it on the comments as well. And then, we can talk about this over dinner.
Yep. So guys, the link is in the chat regarding the website warrants.com.sg. Go check it out, all right? And yeah, do go. I mean, if you are keen to find a little bit more, right, attend this seminar next Wednesday, 6:30 p.m. See Jamie live, all right? And this way you can ask your question as well, all right? Yeah. So Jamie, maybe one more question, maybe. I don't know. Let's see.
I think Zach has an interesting one. Zach is saying, do you change your volatility percentage during the trading hour? For example, the Hang Seng Index, which swings a lot during trading hour. Well, Zach clearly is an existing warrant trader by asking such a question. So thank you, Zach, for trading the product. And it's a very good question. Now, it's also one of those questions that we discuss at length at the advanced warrant seminar. So if my answer today is not good enough for you, I suggest you attend this seminar, because we will have actually demonstrations of why that's the case, if there are change in volatility levels and how you can tell. But on Zach's question, we have this tool, like I said, known as the live matrix, right? Which shows you where the warrants are trading live during the day. In this case, he's talking about Hang Seng warrant, for example. Let's say this put warrant. You can tell exactly where it's traded, during the day. We show you how the warrants will move alongside the index levels, right? And this is all live. And from here, you can obviously then know and expect where the warrants will be based on the index levels, right? So if you think, for example, that the Hang Seng is going to go to 26,000, what this live matrix tells you, because this is a put warrant, so it's actually going to fall at 26,000. This is going to fall from its existing 6.3 cents on the bid price to 5.7 cents. And this is provided that implied volatility levels stay constant. Zach's question is interesting and it's probably not foreign for those of you even who haven't traded warrants before, because on the warrant calculator demonstration just now, you might have noticed this boxed up field called volatility percentage, right? And obviously I didn't talk about that because we're assuming that volatility stays the same during this period of time, right? But what's going to happen is, if you quickly look at this, is the higher the volatility, the higher the warrant price. The lower the volatility, the lower the warrant price. All else constant. Yeah? So spot price and all that constant. Now, we try not to move this because we understand that it's very frustrating for those who are trading during the day, and encounter, frequent change because you're looking at live matrix, you're trading your view, you're saying at 26,000, I can get out at 5.7 cents, right? And if volatility changes, so in this case, if volatility drops, right, the market actually has, at 26,000, the warrant bid price might not be 5.7 but 5.6 cents. The price will actually drop because implied volatility has dropped. So we understand that's frustrating, and as much as possible we therefore keep it constant during the day. But what are the examples where you will find that implied volatility would change? Now, in this case, it really depends on what the implied volatility of the index is doing. Now, a Hang Seng index is generally more volatile than, say, the Straits Times index, right? More volatile than the SIMSCI index in Singapore. And so what that means is that the volatility could move around quite a bit during the day compared to STI or SIMSCI. I'll give you another example. Between YZJ and Singtel, which do we think could be more volatile, Joey? Whether during the day or over a period of time, generally speaking.
Generally speaking, I would say Zhejiang would
Yes,
more
it's
volatile
just a more
compared to
volatile.
Singtel.
Or a pop mart versus a, pop mart versus a
Sheng
HSBC, for example.
Yeah,
Yeah, obviously
yeah,
the pop mart is a lot more volatile because it moves more during the
definitely.
day. That means that a pop mart warrant is subject to more changes in volatility because the volatility levels spike for pop mart shares, on the what we call the exchange traded options market where we hedge. If that does a spike, we actually got to adjust the volatility of our pop mart warrants upwards. So the good news is if you're just holding on to warrant and you were sitting on a loss, you're actually losing less because implied volatility goes up, right? But of course, if implied volatilities levels on pop mart options come off, then you might see a bit of the adjustment in implied volatility downwards as well, which means the warrants are going to drop in price. But we understand from a viewpoint of a share or warrant investor that when you see a drop in implied volatility, it's always not something nice because the warrant price drops. Unless you're looking to get in, then you don't mind getting in at the cheaper implied volatility level because it means a cheaper price for you. So therefore, whenever we adjust downwards implied volatility, it's very gentle. But when we adjust it upwards, it really depends. For some people, they think like, hey, I could have gotten in at 5 cents. How come now it's 6 cents? Because you increase the implied volatility levels upwards. So it's actually not so easy for us as well, unless there is nobody really trading the warrant. There's nobody really holding on to the warrant. Then sometimes you will see the very drastic adjustment in implied volatility levels because we know, nobody is affected by it. So I hope that answers your question, Zach. The answer is yes, we do, but we generally for a positive trading experience for warrant traders, we try to keep it unchanged during the day. And if there are changes, it's usually very, very minute. Across a few days, you could see that kind of adjustments, especially I'll give you an example on 7th April when markets crashed because of the tariff news, right? Implied volatility levels, whether in the US, in Singapore and Hong Kong, just in every market, implied volatility levels exploded. So in that case, all of our warrants saw implied volatility adjusted upwards, by a very big amount, which meant those people who might have lost a lot of money because stocks were down so much, indices were down so much, actually lost less. And that's the kind of situation where you see an inevitable and massive adjustment to the implied volatility levels, but you wouldn't see it on a regular trading day. Okay. Zach, you also previously asked the question, can you watch this video later during the day? Yes, I believe Joey shares this on
It'll be on YouTube. Yeah.
Yes.
So no worries. So you can watch on YouTube. Make sure you subscribe to my YouTube channel, guys. I think there should be an icon at the top. Click on it, subscribe, so that you can watch the replay. After this live session. Not to worry, right? So you can go catch up on what Jamie has mentioned as well. The link to the seminar next Wednesday is in the chat as well, guys. So go to join Jamie next Wednesday, 6:30 p.m. If you're free, that's where you can meet Jamie personally and answer any questions regarding the expert, right, in warrants, right over here, right? Okay, anything
maybe
else?
we take just 2 more questions because Ian and Music Lover asked this quite early on. So I'll start with Ian. What are the minimum and maximum capital outlays needed to buy these warrants? A very good question as well, Ian. Today, compared to last month's episode where I actually used the exposure simulator, I didn't use it this time around. But let's say going back to the YZJ call example, We have another tool called Exposure Simulator for you to work out what your capital outlay can be. Like I said, warrants are a lot cheaper and require lesser capital outlay compared to the stocks. So in this case, the stock costs about $2.96, right? But with the warrant, it's only about 6.4 cents. And so you actually, and because it has a gearing level of 3 times, you actually use less. So for example, if you buy, let's say 10,000 of these YZJ shares, you need to come up with a capital of around 30,000. But with the warrant, if you want to use this warrant, you actually use less than $10,000. And the number of warrants that you can buy is about 154,000 units. Okay. Why do you buy so much less? Well, that's because, it's gearing your exposure, right? It's magnifying your exposure. So you actually therefore invest, the amount of gearing times that level, whatever it is, that lesser amount, okay, by about 3 times in this case. Now, if of course, the bought size of a warrant is only 100, right? Same as shares, right? The minimum is 100. So, you can use as little as you want. In this case, if you intended to buy just one bought lot of YZJ shares, which will cost you about $300, you use only $99. So it's really up to you. 100 of 100 lots of this warrant is only $6.40. So you can use as little as you want, Ian. But generally, we encourage you to think about warrants investment in a way where, how much will you be investing in the stock? If you were going to buy 10,000 of this YZJ share, then you will invest less than 10,000 into this warrant. Yeah. That's my answer for you. I hope it answers your question, Ian. Now, for music level, how is the warrant liquidity? Can I buy and sell at any time? Will certain stock warrants be less liquid and have difficulty selling? I think today we've just had such excellent questions. Well, first of all, the warrant liquidity, that's something you can see on our warrant search page for all warrants. If you wanted to see for a specific warrant, now in the case of YZJ, you can also do so. So if you want to look across warrants, you can see here, there is a bid volume, that's our volume, and there is an ask volume. Of course, even if the traded volume was zero, as you can tell here, this Alibaba traded zero, but there are 5 million units. So 5 million units on the bid, 5 million units on the offer. And then you've got tight spreads here. So you can get in and out at any amount you want, and with ease and without a problem, because we are there on both sides, right? Some warrants have got lower liquidity. In this case, you can see it's just 50,000 on the bid, 60,000 offer. Now, why is that? This is usually because the warrant is probably on white spreads. It's going to expire soon. In this case, you see this Alibaba warrant expires next month. So the lower the liquidity, we're trying to tell you, and the higher the spreads. Can you see this on white spreads here? We're trying to tell you we have minimal liquidity because we don't want you to trade the warrant. Of course, on the bid, we'll always put out enough liquidity such that if you're a holder of warrant, you can always get out. But we're trying to tell people who want to buy to please stay away, right? We can communicate that only via liquidity and spreads. Okay, so in the case of YZJ, I just want to quickly show you then what is the liquidity. YZJ, this warrant with the fire logo, highest liquidity, you can see we're offering and bidding 3 million units. On the bid and offer, it's on tight spreads, right? This one that we talked about, GFGW, it's actually got lower because it's not on the tightest of spreads, right? It is a warrant that is very high delta already. What you're not seeing is this delta column, this first column here. This YZJ is quite high delta already. So generally, we widen the warrants whenever it's very high delta, too sensitive, we call it, because why? The stock has rallied a lot, right, from the point where we listed it, or it's very low delta because the stock has dropped a lot from, away from the strike price and is quite short dated. So therefore, it's our way of just communicating to you to stay away from it. But if you really wanted to buy, you still can, because it's, if that works in your favor. But generally, we encourage people to go for tight spreads warrants, high liquidity warrants. And the instances where you see very low liquidity is usually whether very high delta, low delta are going to expire. And we're trying to tell you, maybe consider another warrant instead. Yeah. So music level, you should not have difficulty selling. The only time when you have a difficulty selling is those warrants that really are going to expire, very, very soon. So I'll give you an example. Um, we've got some Hang Seng warrants that expires this month. So of course, some of them, they've already stopped trading. But this Alibaba warrant, can you see it's a much lower liquidity. This Meituan call warrant especially, it's got 0 on the bid. Even though it's on its last trading day, that means it's still trading today, last day of trading. Why? Because this warrant is essentially worthless. The expiry is very soon, okay? And this strike is 200, but Meituan is not anywhere near $200. So the probability of it expiring with value is 0, right? And therefore, in this case, we're not even providing a bid price anymore. But if you really wanted to get out, you can always give us a call at 66010289 to speak with any of us on the desk to ask if we could just provide a goodwill quote for you to get out of. But in order to prevent such situations, I always say, ladies and gentlemen, get out before the maximum holding period that is indicated on the tools. Okay, use the tools to your advantage. That's the only way that you can trade the product or any product successfully. Okay. So I believe that's all the questions we can take. Maureen, you have asked the key features between warrants and options. Something we have explained at the start of the show, actually. But if you wanted greater, details, again, you can either come for our seminar on next week on 3rd of September, or we've actually got under the warrant education section, we've got educational 1-minute video under the frequently asked questions. Here, it is one of the favorite questions that people ask. What's the difference between warrants and options? You have a more detailed explanation here, but even then it's less than a minute. So maybe you can have a look there, because in the interest of time, we probably can't answer that in full detail. But I would say the main and most important feature is with warrants, you can't short it. So whatever option trading strategies that you're used to doing and performing, you can't use it on warrants because you can't short warrants, right? You either buy a call or buy a put. You can't be shorting. The other one is the presence of a designated market maker in warrants that we have. With options, it depends. Some options have got a market maker, some options don't have. And then finally, warrants are traded on the securities stock account. They are not available on margin, whereas options are available on the margin account. So, you're subject to margin calls when you trade option. There is also a very popular podcast channel called Dollars and Cents. They've actually just released this week quite a lengthy podcast, but very comprehensive one, talking about the differences between warrants and options and warrants and other products, and how how some warrant traders use it. So maybe you can tune into that as well. Okay. Okay, final question. Ian asked a follow-up. Is it possible to roll over to continue to trade for warrants like we do with options? Well, this concept of a rollover, again, is something we talk about in the advanced seminar, whereby, if, for example, just now I said the Yang Zijiang warrant, the maximum holding period is the last trading day. But you want to continue to hold on to Yang Zijiang warrants because you think, it's a very strong trend and there is more upside. What can you do? Actually, one of those things, a concept of rollover, in this case is you exit from the warrant. Okay, we talk about this. So say 350 and the maximum holding period, 19 December. You are in the money, right? And you want to continue holding it, but you can't already because the maximum holding period, in this case, maximum day of holding is the last trading day. What you can do is you can just exit from this warrant at 8.5 cents with a 31% return and look for the next best call warrant over Yang Zijiang. In this case, there is a longer dated one, KLGW, and enter into this position so that you can roll your position for a longer holding period, if that makes sense. Okay. And you can also do that, if your maximum holding period is up. In this case, Yang Zijiang had not gone to 350, so for example, this warrant, right? Yang Zijiang has not, hit 350, and the maximum holding period we said was around about 70 or 75 days, right? And you're told, okay, Yang Zhejiang is not at 350. That is a target maximum holding period. Maybe Yang Zhejiang is only at $3, right? $3, but you think it can still go to 350. Then in that case, what you probably want to do is cut your losses at a 40% loss here. I know it sounds chunky, but 40% is better than 100%, right? Which is the maximum loss of warrant. You cut out of here of this warrant and you look for the next better warrant, you know, where you can hold on to the warrant for longer. So that's something known as rolling over your position by, you know, with warrants. It's a little bit different from option rollovers, okay? Because with options there is the expiry, right? And then basically if you want to hold on to that view, you have to then settle, you know, the current expiry and then maybe roll over into the next month expiry, etc., etc. But with warrants, the way to do it is you have to manually exit from it and then buy into the next best warrant, okay, which you have to search for using either the selector tool, it's the easiest, or you can use the warrant search to search for the other existing warrants over Yang Zhejiang, which allows you to hold on for longer. Okay, that's how you can roll over. Ian, I hope that answers your question. And with that, we're at 11:31. I think we have to end this. It's a 1.5 hour show. I was just telling Joey before the show that I would have thought that today would be quite straightforward because I don't have a put warrant over Yang Zhejiang to demonstrate for you. Yeah, but okay, 1.5 hours. We hope it was informative for you. Joey, any last words?
Yeah. Thank you so much, Jamie. All right, for sharing, you know, on how one can actually use warrants. I hope that you guys are now much clearer. All right, on how you can use warrants to potentially write this position on Yang Zhejiang, which I've shared. All right, so yeah, I just want to thank Jamie for joining me today. All right, and of course, guys, you know, next Wednesday, Jamie has a seminar, 6:30 p.m. The link is right in the chat. Check it out. All right, check it out. It's right up there. If you're free, good to you know, show up live, and that's where Jamie can share with you more. If you have any advanced questions, well, Jimmy will be more than happy to help you as well, right? And one more thing I want to add is that some of you are actually kind of like, you know, asking me privately if you could also have access. I mean, how do you actually have this tool, right, whereby you could turn on and off and get an opinion in seconds on any stocks like, you know, Mart and Yang Zhejiang? Well, I've placed the link in the chat above. Just scroll up, guys. You can test drive my 1GT light indicator for free. All right, this is the pro version. We have the light version. It's a bit more simpler. All right, you can turn on and off the signals, get an opinion based on the bullish and bearish signals in seconds. Link right in the chat. You can check it out as well. All right, so pretty much I think we have come to the end of today's session. Anything to add, Jamie? Nothing per se, Jamie? All right, okay. So
no. Again, thank you for inviting me to be on the show, and I look forward to next month's show so that we can catch up and review today's Yang Zhejiang's trade idea, and you know, hopefully we hear from someone who was on the show today and who hopefully makes some money via warrants. Then maybe you can call out and ask if anyone, you know, were to say if they made money with the warrant.
Yep. Hopefully, yep. So probably I'll see you guys next month, all right? And we have Jamie. So once every month we try to do it, all right? We have Jamie over here, and then we talk more about warrants, all right? But as I say, guys, I think some of you are actually typing in the chat, like, you know, asking about SIA, Nam Chong, you know, ST Engineering, Wilma, right? So I think probably you guys might have think that is the Friday weekly Ask Me Any Stock AMAS session that we do with my team. So we're not doing this today, so sorry. So in case we never cover your SIA, your Nam Chong and your Wilma, right? So sorry, we can't do it today. Join us on Friday. The link's right in the chat. I think above we have placed the link in the chat already. So check it out. Join us on Friday. And that is where is our weekly AMAS. This Friday will be back to the Singapore stocks. All right. So
yeah, the person asking about SIA shares, Joey actually just shared that this week. So he wrote an article about it. And if you wanted to know his view, you can come on to warrants.com.sg. That was what we shared this morning under our newsletter, actually. So you go to warrants.com.sg and you go to Morning Market Bus under education, and you'll be able to read it.
Yeah, let me just see who is asking. Okay, good morning. We share about SIA C6L. So let me just place the link in the chat as well. So in fact, I've written an article on SIA, all right? There's some talk about warrants as well on SIA. So I've just placed the link in the chat. Check it out, all right? Check it out. So you can read more about, you know, not just on SIA, but also how you can potentially use warrants to write as well the reversal. All right, so that's it, guys. Thank you so much for joining us. Right, this type of buying. All right, so that I'll just acknowledge all of you for just being here, showing up. All right, just joining us in today's session. Almost more than 100 of you still over here. Thank you so much. Bye, everyone. All right, bye. Let me see
Bye.
you
Take care.
here.
Good luck
Bye.
with markets. Bye.
Yeah, have a good week ahead. We'll see you guys next session. Bye-bye. Bye.